Howdy, howdy. It's the lunch hour. We welcome you to Finance Friday. We're coming at you live at Insight Production Studios in Phoenix, Arizona. And for the next 30 minutes or so, we're going to be talking about your money, building your wealth, and quite possibly those hot stock tips because I know Chipotle's in it. Right, Frank?
That is right.
Go along on Chipotle. My name is Robert Morales from RCO Network. Good people, better business, discovering the best of you. And my esteemed co-host from the Coleridge Group is...
Francisco Ayala, Francisco, how, en español, en inglés, however you guys want to do it.
Oh boy, I like Finance Friday, Frank.
Okay, Finance Friday with Frank. That sounds good.
So we'll be taking questions live. If you type in those questions and comments during the broadcast, we'll get to them as we go along. But please give us a little heart because we love those loves if you're watching this show. And if you're also watching on YouTube, smash that subscribe button below and we'll be notifying you of those future posts as we bring them. So we come to you every week with your finance questions, your finance needs, all that good stuff. So go here. So hello, sir. How are you?
I'm doing well. Interesting week this week in the market. Huh?
I would definitely say so.
Got your attention? Huh?
Yeah. Let me show you a slide real quick.
Sure.
So this was yesterday, and I'm looking at my stocks yesterday, and I'm dying slowly.
Yeah, it's the end of the world now, right?
Look at that stuff. I mean, there's a couple in there that I have, but look at GME stocks were up 77%.
Yeah, right. Yep.
I'm like, what the heck? We're going back to this crazy.
Hey, now we get inverted, right? Now those are performing and the market is underperforming. So yeah,
it's
flavor of the week.
It is very crazy out there, and you know it's so funny how much our stock market's driven just by stocks, and we don't talk about bond yields too much. We don't talk about really anything else other than stocks because again, that goes back to that whole idea that stocks are sexy. I think.
Yeah, I mean that's a perception, right? Is that the actual name of the stock, right? The GameStops and the Amazons and the Pelotons and stuff like that. Like if that's really driving the market, right? When in all reality, GameStop is just like a tiny fraction of the market value of the company. That thing doesn't even move anything, right? It's just fun to talk about and stuff, but the real movers of the stock market is so many other things, right? It's interest rates, it's inflation expectations, it's political things that are going on here, political things that are going on in the world. And so, but we tend to focus on those little stocks of the Amazons and the Teslas and stuff like that. And so.
Because it's what gets the news of the day.
That's what gets the clicks. That's what gets the chicks and the clicks.
So we initially started this show, and I think you'll agree with me, Mr. Finance Friday Frank.
Yes,
is that we're here to help people kind of, I guess, do a gut check on kind of where they're at, in their portfolio, help them educate a little bit, and I think come from a sincere level where we're not trying to sell anything. We're really actually trying to provide information, and then hopefully you make the best decisions. And I think individually, I mean, you can come to me, but I don't know anything about finance. I watch a bunch of stuff on the news. I watch YouTube videos. I try to educate myself.
Right.
And I know not a lot of people do, but they could also come to you too, right? For specific questions off the chest.
Yeah. Well, I mean, so the purpose of this, of kind of us talking is exactly that. Is one is to provide information, but hopefully it's valuable information that people can use in their decision making. One of them that we talk about is the behavioral aspect of it, is why we decide what we decide, and is that rational? Is that irrational? And how is that affecting our decisions? The other thing is also just very technical stuff, stuff that we talked last week about PE ratios, right? Where that's a fundamental way of looking at an investment. It's not the only way, and it's not, the preferred way for many people, but at least it's one way. People can use it and say, hey, how much am I paying for some earnings, right? Well, how much is it buying me? And so it's one way. So anyways, we're just trying to marry the two, right? Is about the behavioral aspects of finance and investing, and also more technical stuff that people can use out there as they make decisions and things like that.
And
Um,
be informed. And again, I came to you early on in my kind of investment career in the last like 10 years because through my divorce, and you directed me, from that point on, I just made some decisions on my own. But again,
Yeah, so definitely. I mean, work. This is what I'm doing here is general knowledge. It's not financial advice specific to anybody or anybody's circumstances. It's just general knowledge that people can use without any agendas, without any profit motive or anything like that. Now, I will say that I am an investment advisor registered here in Arizona. Work for the Coleridge Group, as you said, and if people are looking for a more in-depth personal advice, then yes, exactly, that's exactly what I do. I am actually kind of getting excited because we are revamping our company's website. It's down right now, but we're working on it, and so hopefully in the next couple of weeks we have a brand new website with a lot of good content on there, and people can check us out. And it only engage with us if it speaks to you, because
right.
what I want people to understand is that there's a lot of advisors out there that they're going to believe certain things and they're going to run their business a certain way, and only work with the one that really speaks to you. Because if you don't have that good relationship and the good chemistry, then you'll eventually end up dropping them. So just be true to yourselves.
Yeah, and I say that very much so to real estate agents too, because that's my primary business.
Yes,
Um,
right.
uh, there are so many agents out there. The one that really calls to you, that really makes sense to you, that really connect with, that's who you go with, and who you feel is invested in your own interests and not necessarily their own or anybody else's. So that's, finding that confidence is really, I think, the key when choosing a financial advisor, a real estate agent, or anybody else in life. I mean, that's
Exactly. A partner, a friend, or something like that. You want somebody that you can relate to, that you can have good chemistry, that you believe in kind of the same things, at least. Have a good base to kind of grow that relationship. And so that's an advice. If it's not us, if for some reason you don't like what we say, what we do, how we do it, or whatever our outlook, then yeah, by all means, I don't want you working with us because we're just not a good fit. But there's a lot of people that are going to be a good fit.
So, with saying that, as we express opinions and positions on regarding stocks or anything we're sharing here today, it is an opinion. So please take it with that. If you do want to hire Frank or talk to him, please, his information is in the comment section below. So we're about 10 minutes in. We got about 20 minutes. It's a 30-minute show, maybe. I don't know.
Give or
Sometimes
take. Yeah, sometimes we run a little late, but it's always good stuff.
we're just like a stock. Sometimes we go short and sometimes we go long. So hang in there. Again, if you have any questions or comments, go ahead and type them in, and we're going to get into a little bit more in depth what we're here to do. So now, do you know what a SPAC is, Senor?
I do know what a SPAC is. Yes, it's a very hot topic right now. Companies going public with this thing. Yes.
So SPACs, I'll go ahead and throw up a definition.
Sure.
I pulled one up real quick. SPACs are a special purpose acquisition company. It's a
Correct.
company of the commercial operations that are formed strictly to raise capital through the initial public offering IPO for the purpose of acquiring an existing company.
Yes.
So blank check company. So in essence, a fake company.
It's a shell company, right? It's a shell
That is what it is.
company that gets listed on the exchange, and it acquires somebody to go public. Correct.
Yeah, and with some of the volatility we have in the market, and personally, I believe things are shifting, and not only with the stock market, but in real estate, and it's for various reasons, and I think sometimes for reasons just like this. I came across this article in February or like 2 weeks ago. Just another SPAC files for U.S. IPO,
Right.
and really that's the name. Just another SPAC. There's no form basis in business, no business structure, anything. They're just filing it to file it, and they're getting on that GameStop trend where they're just the FOMO stuff. You know what I mean?
Yeah, I mean, it's a hot market, right? And so usually an IPO market, the way people go public, companies go public, is usually has been through IPOs, initial public offerings.
Yeah.
That is a very long process, and it's a very costly process. Underwriters and roadshows, and all these things that you have to do to meet the regulatory standards. And what the SPACs does is they go into the exchanges already. So they've done all the paperwork and everything, and all they do is just acquire a company, and that means that overnight a private company can go public and raise whatever amounts that they're raising, billions at this point, without having to do much of the legwork, right? But
Yeah.
what happens is that under an IPO, they have to show some value to the underwriters, to the public. They go to seminars and they present themselves, and this is how we're doing, and these are our profits, and all this stuff. And then the market gets to decide what price that is, right? Well,
Yeah.
through a SPAC, they can circumvent all that, and they just get listed. And people are exactly what you said, FOMO. People are just, well, this is a SPAC. This has to be good. This is another whatever, and they just keep bidding the price without having really done the due diligence that they would in an IPO.
Yeah, and we have a stimulus package being released, and I believe a lot of the money that's in the market right now could be due to the stimulus. I mean, a lot of people aren't going out and shopping and paying for dinners. They're not buying stuff. If they're buying stuff, it's usually on Amazon. God only knows, like, you should see under my desk how much stuff is from Amazon. But they're not necessarily out there, so they're behind a computer and they're watching these stock things happening. And I think we were talking about showing a chart, but they're watching all this stock action. They're hearing all these people make thousands of dollars in sometimes just a whim, or in a day. I think Elon Musk purchased $1.5 billion in Bitcoin.
Yeah.
And it just shot up the price, and now that's kind of fluctuating in itself. But people, there's so much FOMO going out there, fear of missing out, by the way, that
Yes.
people are just gobbling up this stuff, and it's not
Yeah.
healthy for us.
So I mean, there is a lot of things that are driving this, and for many years, since the Great Recession, that's what, almost 13 years ago, 12, 13 years ago. The Fed really did a lot to sustain the economy. It kind of lowered the interest rate as low as possible, and then it bought these mortgage-backed securities. And the Fed was doing a lot of the heavy lifting, but there wasn't the fiscal spending that the economy might have wanted or needed at that point. The government spending, because there were just gridlock in Congress and stuff like that, and just things couldn't get done. Trump came in, he did a little bit of fiscal spending. So you see that rise in the 2016, 2017, the stock market, because now not only do you have monetary policy that's nice and loose, now you have fiscal spending, but that fiscal spending tapered off. Well, now with Biden in there, Biden administration, control of both houses, both chambers of Congress, now the economy is saying, okay, so now we're really going to get some fiscal spending. Right. And Powell, the Fed, is saying, and we're going to keep interest rates low. And so you see I think you have a chart there on the 10-year yield, right? On the yield on the 10-year, is that it just shot up recently, because now people are, you see from November, actually before that, I guess, because the market was probably anticipating a Biden win already. But you see from November and in the last couple of weeks how it shot up, is that there's so much money coming into the system that and rates are going to stay low for a while. Is where else are we going to put their money? We talked about last week about TINA, right? There is no alternative. They're not going to go into a lot of these low yielding bonds, and so they're going into these stock markets. More growth, more money being thrown out there, and so you start seeing these this rise in the stock market. However, you saw this past week, we kind of jumbled a little bit, right? Because now the market's trying to digest, okay, well, what does this mean for inflation, though, right? Is inflation going to be a problem in the future or not? And so that's what the market is trying to find its footing. It's trying to price in how to price in the economic growth from the stimulus with inflation fears in the future.
Yeah, you know why I love you so much, Frank? Because
Common comment, man.
we're like totally in sync, and it's not like we prepare a whole lot for this stuff.
We
We don't
prepare for 2 minutes, man.
prepare for a good hour. I mean, there's always stuff that comes in. I'm always taking notes on what we can present, but you start talking about the stimulus package. That's actually kind of what the next direction of what I wanted to go into.
Oh
And
yeah.
so the stimulus right now isn't signed into law yet. I mean, there is a proposed stimulus package
It's a. I heard it was supposed to be maybe passed tonight. So
by the House, yes.
yes.
And so we have the House proposal here. We have a kind of a breakdown of what that looks like, how it's going to be chopped up, and what it's going to look like when it gets to the Senate. That might be a different story. There may be
Right.
additions, there may be subtractions. I will know subtractions for sure. I almost and I'm almost betting with 100% guarantee. That's again opinion that this $15 an hour part of it won't make it because it really doesn't tie back into COVID, and we do have some very slim margins regarding voting power in the Senate. So the biggest things, because I am a business owner, I have two companies. I have an S corp, and then I have an LLC,
Hmm.
and some of this does affect me. There's a part of me that's still in social work, that's a bleeding heart, that wants to help out common people who aren't necessarily in a financial position like yourself or myself. But then there's the business side of me that really is in conflict of being supportive. And because of items like this, increasing the minimum wage is something of a concern for me as a business owner, because that
Yeah.
does impact my expenses. And I have one employee.
Yeah.
I'm not making billions of dollars, but I have an employee, and I want to make sure they're taken care of. As well as all this other stuff, and all I see is more expenses, coming out of my business, which also kind of takes food out of my mouth, to be frank and
Yeah.
honest.
Well, and I mean that leads to the larger question too. I mean, now you're getting into real
Yeah.
macroeconomics of by increasing the minimum wage. Is there going to be more people that are laid off instead of helping them, right? Because it's too expensive to keep these people when people in other countries, or more recently in the last couple of decades, technology can do a lot of the stuff, right? Technology can take orders. Technology can wash your car essentially at this point completely. And so do you really need to pay people $15 an hour? That's a whole discussion about macroeconomic policy and countries just trying to, maximize profits, corporations trying to maximize profits. Yeah.
And automation is a concern. Automation
Yep.
for everything, regarding real estate. There's so many automated companies that can list a home and do it for cheaper. They're taking away some of the things, and I have to be mindful of that in order to transition. And I'll give some insight, because again, we're financial twinsies, and you know exactly kind of what I'm articulating here. So part of the concern, part of the impact of a stimulus package, it benefits people on the lower segment of the population, and lower, I mean lower income. It doesn't necessarily benefit the people on the higher echelon stuff, at least the higher tax bracket. So you're
Right.
looking at Southwest. We're talking about unemployment. Southwest is announced 1,000 pilots being laid off,
Mhm.
1,500 flight attendants being laid off, another 6,000 other jobs that are not in those categories. 3M is looking at cutting 2,900 jobs. We
Right.
also so there's a lot of potential unemployment. Disney's laying off in March. They did furloughs. They did 32,000 jobs. I wrote 32,000. I'm hoping it's 3,200, but I believe in Disney. I want the Mandalorian to
I'm sure you
continue.
do.
I
Yeah.
want I want my baby Yoda, and he's still baby Yoda. He's not Grogu to me, but
Yeah.
I still want that. But looking at that ahead of, and planning for the future, we do have some regression in our employment section, which also means as a business owner that I'm paying unemployment fees for that.
Right. Yeah.
And that inhibits my business, my growth. And so there's a lot of things in 2021 that I'm concerned about. Last year I had to pay some extra fees in unemployment tax.
Yeah.
I was actually doing my taxes today. I hate taxes, by the way. I was working on my receipts all night last night. It was,
Oh man, fun.
yeah, my CPA loves me. But I mean, there's so many things to kind of predict and see what's ahead. You know, I personally believe we're gonna head into a bit of a crash, so to speak. I know you may not give that position.
Well, I mean, I can tell you there's going to be a crash. Do not know when, but a crash is inevitable. They always happen, and
Yeah.
we've had, it's going to happen for whether for the reason you think or for the reason somebody else thinks.
Yeah.
It's going to happen, And so the point being, be prepared, however that means to you. Having enough cash sitting on the side, investing, based on your risk tolerance. There's a lot of things that you can do to be prepared, but a crash is happening, and they always happen, and so it's just a matter of, it's not a matter of if, it's a matter of when.
Yeah, there's always pullbacks in every market, and that's kind of the show I give on Mondays. We talk about real estate, specifically on Mondays at the 2:00 hour. So if you guys want to tune in on Monday, we're at that 2:00. We talk about real estate. There's going to be a pullback at some point. I don't know how significant. I don't know when it's going to happen. I believe, with real estate, it's a little bit slower. It's a little bit more sluggish.
Right.
When there are shifts in the stock market and other markets, real estate tends to be that kind of lagging last bit of market decline.
Right.
So I'm always keeping apprised of the stock market and anything that's going on in the economy, because that does give some inferences of what's going to happen in the real estate market.
Yes, right. Definitely a leading indicator, the stock market. They react pretty quickly, to news. And again, we talked about, does the market know everything? Well, probably not everything, but it does a pretty good job of incorporating not only the current news, but good expectations about the future. And so maybe if you bring that chart up on the 10-year yield, you'll see, we kind of talk about why that rise in yield. I mean, there's a couple of theories on why interest rates move up, the long-term interest rates, why they move to that degree. One of them being liquidity, right? People prefer liquidity. And if they're going to tie up their money for 10 years, they want to be compensated for that risk. And so that's a factor that goes in here. The other one is expectations about inflation. And so people expect, is that increase in yield an expectation of inflation, or is it just strong economic growth, that because of that, rates eventually are going to trend higher overall, and that's just a good leading indicator about that.
Yeah, and I appreciate that. So again, if you're hearing anything you like, go ahead and hit those love buttons, because we love those loves. Here with Francisco Ayala of the Coleridge Group of Scottsdale, right? Phoenix, Scottsdale.
We're in Phoenix.
In Phoenix. And so we're talking about your money, your finances, and potential for the future. So the last part of the show today, the last 10 minutes, I did look up the stock price of Chipotle. It's currently at 1,400. It's up about 2.5%. So there's still an opportunity.
Yeah.
there is innovation in Chipotle. They did come out with their cauliflower rice, which I was
very nice,
very happy about. And you're a vegetarian, right?
Yes. Only on Mondays.
Yeah. Oh boy.
Meatless Mondays.
Okay, so I was vegan for about 2 years straight. I was good. And now
you're not anymore.
Now I've gotten into chicken. I eat chicken a little bit, and then eggs. I got into eggs. So still hold true to those vegan tendencies though.
Okay, good.
Except I don't say vegan anymore. Plant-based. I got to remember.
Plant-based. Yes, that's the trendy thing to say, right? So we're plant-based. Yes.
Otherwise, people look at you weird and they think, "Well, are you like a animal advocate?" And I'm like, well, no, I just want to eat plants.
I shoot cats in my alley.
Oh, don't say that. That will upset the cat people.
But
we're here. It's Friday during the lunch hour. We're here to answer any of your questions if you have them. Either leave them in the comment section if you're here live. If you catch us after the show, just go ahead and leave them there. We'll get back to you. Last week we had Mr. Crispin from class 97, Douglas Go Bulldogs.
Yes, that's right. Yes.
Request some information about $5 stocks. I don't know if he's tuned in or not, but I didn't pull stocks because, again, I was doing tax this week. I'm lame. What am I supposed to do?
Yeah.
I was a loser. But no, I did pull some stuff.
Taxes take priority, let me tell you.
Yeah, because I owe every year. And I'm really hoping I don't have to owe this year. But there's some advantages to that too. So using your money, being able to manipulate your money a little bit, grow it, and then pay taxes afterward
Right.
is
Yeah.
always
Yeah.
smarter thing to do.
Right.
But I screw up. I never do. So that's my thing.
As long as you don't get penalized for it, then yeah, go, by all means, go ahead.
I feel any tax is a penalty. But there are more taxes coming. I mean that's the whole thing with new administration. I have to make decisions regarding business. And in my business, what do I need to cut back? What do I need to do? And I'm afraid, with capital gains being increased, there's that. With taxation is coming. It's coming. You just got to plan for it. We have an administration. I don't. It's not politics. I don't like to get into politics. We have an administration who is going to be tax heavy, but we have to. We have to, in order to make this economy grow, in an aggregate sense. I can't be selfish and be like, okay, well, I don't want to pay taxes. I have to pay taxes because I want to help this economy grow and grow myself, grow my business.
Right.
So the last segment of the show today, I did want to focus in on industries, not so much stocks, because who knows what's going on with stocks right now. They're all over the place. I mean, there's no one stock I can tell you today that it's going to make you 10,000 tomorrow, unless you do. Frank, you have any? What's the next one?
Yeah, I'm keeping those close to the heart, man.
McDonald's? How do you think about McDonald's? I know you don't believe in meat, but McDonald's? Okay, so I'll get your take on some of these things. So
Sure.
I pulled a couple industries. I pulled 5, because it
Okay.
seems like a good number.
All right.
Arbitrary. And marijuana industry. Long or short of marijuana?
I think it's still early in marijuana. More and more states are obviously adopting marijuana and legalizing it.
Yeah.
Here in Arizona. We just did, so happy for you. But it's hard still. It's hard when it's still a regulated, such a heavily regulated industry, to be able to say with any clear conviction of where this is going. I think it's still early for marijuana, but again, that's probably when you want to get into things, right? Is when you're early, when people still doubt it. Remember, be greedy when people are fearful. So,
yeah, and I think marijuana as an industry is kind of dying. I mean, if you haven't capitalized on it, if you haven't made your money out of it, I think it's on a short. As soon as it's federalized, as soon as it's made legal,
right,
it's just going to be a kind of a not a dead industry, but as far as like stocks and the sexiness that the high yields could bring, I think that's all kind of simmered.
Yeah, but I mean, so when will that federally accepted? When will it be federally accepted? Who knows? It could be years, and it could be a good time. So it's just.
Yeah, I would have thought it would have been Trump's last ditch effort to kind of get that segment of society. Like, hey, I'm gonna legalize pot.
That's right. Exactly.
He didn't do it. I thought he was going to, but I do think this administration is kind of vested that way. And I mean, there is some money potential in that. It could be heavily taxed just because it's one of those nuanced things. But I think in the next 2 to 5 years, it's going to be just as arbitrary as alcohol. I mean, like Budweiser and stuff.
Exactly. Now Budweiser is a seltzer company. I was reading, that's the way they're making their money, is on all these new products, and not on the Budweiser, but on all the other seltzer products and stuff.
Yeah, all the fake alcohol.
Exactly.
So I did pull one stock in here that's pretty cheap. It's Organigram Holdings.
Organigram, right?
Yeah, it's trading at about $3 a share. There's no information on it. I mean, there was a whole lot. I did honestly pull up the top 10 stocks in marijuana, and this was one of them. And the reason I picked it because it was just cheap. I mean, if you want to get into the marijuana game and you want to be cheap, it's $3 a share. The trending average on that is like $1.46. But at least to get your toes wet, if you go to the
the other thing is that there's a couple of ETFs that
marijuana ETFs
incorporate a couple of so that you have at least some exposure to a couple of companies. So there's a few ETFs I know that have at least more than one holding. So that's another way. That's another way to play it, is through an ETF, marijuana ETF.
Yeah, if you want to hodl on any kind of marijuana stock, I mean, and you're like unsure about marijuana, I think I picked that one because it was just cheap.
Okay.
You could buy 100 shares, $300, and you probably won't cry a river if you lose it all. You know, especially if you lose half. You know, so I picked that because it was cheap,
Okay. Good
and
enough.
there's really no information on it either.
Fair enough.
So it's one of those stocks where you're like, you hope that it gets a trend. You know, you do a couple like. There's so many people on YouTube right now doing Bitcoin, trying to trend it up, trying to get it. I mean, if you want to do a hashtag or Organigram and then buy like 100 shares right now, get in early and then
There
hopefully
you
sell
go.
it off.
Market manipulation, man. That's what I'm talking about.
Organigram, hashtag Organigram. Put it on there. And then sell it off at $6 a share. That was the high on that one. That
Yeah.
was like $6. So marijuana, I think it's losing track as states continue to legalize it and then make it recreational. I think it's just kind of it's not really going anywhere, but you can still make money. I mean, I don't really see it as something to invest heavily in, but to play around in for sure on the short.
Right.
Energy. That's an up and coming one.
Energy. What kind of energy are you referring to? Fossil fuels, oil, or are you talking about alternative energy, wind
Alter.
energy? Because those are very two divergent paths, right?
Well, we can talk about both real quick. I think
Well,
crude oil is going up in price.
crude oils go. Yeah. Yeah. I mean, probably because we're coming out of this economic slump due to COVID, and so activity is picking up not just here but in other countries as well. And so you had that huge crash in oil. So if you rode it since a while ago, you've been kind of on a roller coaster ride recently. But economy is picking up again, and so we're not still clear of fossil fuels. We still use them quite a bit, and so we can still we expect some use of that. But especially with a Biden administration and things like that, where they might invest more heavily in wind energy and solar energy and stuff like that, and so you'll see a lot of in that type of energy sector too, right? You already saw it, once I think probably even before his election, you saw some movement upwards on that.
Yeah, and I think alternative energy is kind of the direction they're going. We saw that with the tax cuts during the Obama administration. I think we'll
Right.
see something similar during the Biden administration. I did pick a stock just to kind of look at. Again, if you're one of those, dipping your toes in, don't want to spend a whole lot of money, and hopefully something goes, viral or whatever. VOC is an alternative energy company, selling at about $3 a share right now. Again, it's something you can dip your toes into, not get too crazy about, and feel good about when if you lose all your money on it because it's only
Okay.
$3 a share. Again, and then the PE ratio is on a little bit higher. It's $9.
Well, I mean, given a market PE ratio of probably over 20 right now, hey, that's half. So that's not too bad PE ratio.
And a dividend yield of 8.39%. So
I'm not familiar with this company, to be honest with you, but because it is a trust, there's I don't know if it's a closed-end trust, or you might want to do some research on that, because the fact that it's a trust, it says something, whether it holds multiple things or it's a closed-end kind of thing. And so yeah, a little bit more research on that one for sure.
yeah, I tried to read about the company in the last like the 10 minutes before we got on the air.
Oh yeah, that's your due diligence, huh?
They have multiple, yeah. So you did play into it. They do have multiple alternative energy sources. So that was something that just kind of caught my attention, merely for the price. Again, if you're one of those dabblers, it's like,
Right.
I'm not sure. I have $100 to get in the stock market. So what
Right.
should I invest myself into? I mean, it's something to kind of throw a couple bucks at and see where it goes.
The thing with that though is, before, if you had $100, then yeah, you want to get a position, a couple of positions, and you would have to look for those couple dollar stocks and to make some good shares. But now with this splice trading, that you could buy slices of shares, then that really is not really necessary anymore, because you can just buy a share, a dollar of whatever, of $100 share price of Apple or something like that. You could just buy a fraction of it. And so.
Okay. So I did want to get into the next segment was I guess, in industrial metals.
Okay.
And the reason I wanted to bring this up because I bought some stocks
Hmm.
into this one.
Let me see. Show me.
And it's hurting me right now. It's hurting. I don't know the direction where we're going with this one.
Vale, iron ore.
Yeah. They do. So I bought this, because of stupid Elon Musk. He's like, yeah, we're doing lithium batteries, man. We're going to be going out there doing them electric cars. And so I'm like, so I typed in that day, I'm like, who's the best manufacturer of nickel? Going hard on nickel. So it was Vale or Volley, whatever it is.
Vale, yeah.
So right after the announcement, I bought, some shares, and it's just been declining. And this is manufacturing. This is the cultivating. This isn't like, I think it's just iron ore. They produce it.
From what I know about Vale is that, yes, I mean, they do more than iron ore, but that's their bread and butter is iron ore. It's a Brazilian company. Did you see the PE ratio?
Yes, right here. I did see that. It wasn't like that 6 months ago when I bought it, but
Yeah.
but it's been on a decline. And so industrial metals, it's just so weird. When we have a pullback in the market, we do tend to go into metals and things of like crude oil, those industries that are, our bread and butter industries. And I don't see that now. I don't really, see that, manifesting in anything. I mean, silver probably, because everybody's going crazy about silver, but
Yeah, the thing with these though, like Vale and some other mining companies, is that they also, I remember reading about Vale recently. They had a big mining issue that they got sued for billions, and it wiped out that's probably one of the reasons why it wiped out a whole bunch of market capitalization, is because of all the legal trouble that they get into in their mining operations.
hmm. All right. So we'll get off volley for a second. We only got a couple minutes left in the lunch hour, and I do have two more I want to kind of throw at you, sir.
Sure.
This one only because I believe in it and I believe in Baby Yoda. Walt Disney. So the next segment, the next market I think is going to be very prevalent in 2021 is the entertainment section. Walt Disney is well established. It's been around since early 1900s. Company, but they do have some layoffs coming up in March. I don't want my Mandalorian to go away, but looks like it's kind of based on the stock price and some of the things that are going on with the company. I'm a bit concerned about Disney, but I do believe entertainment is going to be huge come July and past July 2021. And so looking for those opportunities in entertainment is good. And
I mean, as if you'll see on the left-hand side, the 52-week range. So within the last year, that thing was trading at $79. And I mean, so basically during the height of the coronavirus, when the theme parks were going to get closed and stuff like that, that took a huge hit. But yeah, Disney is a lot more than just the theme parks right now. It's the theme parks are probably just a fraction of their total revenues. They're very diversified into a lot of entertainment space, sports, and all the movies and the production and streaming and stuff like that. And so but it took a while for the market to realize that. But I think it looks like if it's finally turning a corner.
I believe in Disney. And only because their acquisition of ILM. I don't believe in the direction of Star Wars, but that's a whole other conversation. That's a whole other show.
Yeah.
And the last one.
I'll second that one.
Excuse me. So the last one. So the four industries that I have on kind of the queue that I'm kind of looking at considering.
Sure.
Marijuana. We got energy. We got entertainment. And then the last one I wanted to kind of get your input on was cybersecurity. Sure. Only because, again, I do have some market share in this one. Get in there. You get in there. I know you're waiting.
Hit me.
Literally, or?
Sure.
I can't even pull it up. PLTR. There it is. There we go. Going a little bit over, but it's okay.
Oh, yes.
So Palantir, I bought it. I wanted to buy it when it IPO'd, but missed the boat on it. And it didn't shoot up right away. It shot up, and I purchased it just about $20 a share.
Hmm.
Went up to I think a top of like 44, and I was like, yes. But
Right.
they're a company that's invested in data security, and I believed in the company more because they're not selling your information. You know, like Facebook or Google, a lot of the revenue stream is selling data, selling your information. Palantir is totally against it. It's your private information, and so that got my attention regarding their company
Yeah.
perspective. There's obviously no PE ratio. There's nothing, no data to kind of base that opinion on, but it's basically gotten back to the same price I purchased it back in November, and I'm just sad. I was making.
Yeah, I mean, I think in this industry, it is ripe for consolidation. There's a lot of new technology out there of what is the best way to approach cybersecurity, and so you might have a big company with a lot of cash flow. You might see the Apples and the Amazons and the Microsoft and stuff like that acquire something like this. And yeah, because cybersecurity, it's all about the future, right? Every company is. You hear about CEOs, what keeps them up at night, and for the vast majority of them, it's cybersecurity.
Yeah, and I think the Trump administration was fairly relaxed regarding cybersecurity. You again take your whatever political position you want, but you have to take things as they are. And there were an administration that wasn't necessarily heavy on. Well, I mean, you do whatever you want. You can say whatever you want with them, but again, my position on the cybersecurity is that that administration wasn't very heavy on that. I believe this administration will be.
Yeah.
And so again, if you want to dabble your feet into the personal cybersecurity market, I think this one is a good one to kind of get into, or at least look at, pay attention to. It's the Norton LifeLock.
Oh yeah.
Recently in December, they purchased Vera, which is a cybersecurity company in Europe. So there's some expansion there. The no PE ratio is announced yet, but a dividend yield of 2.43.
Hmm.
I did on another site saw that their PE ratio is about 3.9. Their 12-month, it was a 12-month trailing PE ratio of 3.9.
Okay.
So I had my eye on that. And again, it's a cheap stock price on top of it. So I can throw in a couple $100 and not feel bad about it if it completely crashes.
Very nice.
And I think, so those are my tips, but, and as we go off of that, trading and getting into the stock market isn't something you make a full-time job. Well, you can, I guess, but somebody like me that
Yeah.
doesn't look at candles all day, that doesn't really, can't really follow, because I do have to work at some point.
Yeah.
I can't really follow every market and everything going on. And just like everybody else, I want to have my FOMO moment too. I want to be able to buy a stock at 10 and then trade it at 200.
You want to
I'm just
brag.
like
Yeah.
everybody else.
Yeah. You want to brag. Yeah. Yeah. That's it. We are part of our psychology and how we're wired is that we do want to be able to, have those types of feelings, right? That we're winning and stuff like that. And so it's just a feedback loop that gets wired into us. And so just, and I'm not saying don't do it, but just be careful of why you're doing it, right?
So, and as we wrap up, because we got to go back to work. It's 1:00.
Yeah.
No more lunch hour. How fast
Already.
it goes.
Yeah.
Frank did share an article with me earlier this week that it's something to read into, again, to address your FOMO moments. This is something to have a gut check moment about. This is what this article talks about. So the Wall Street Journal, why your wild trading ideas feel so right. So it kind of reminds you of what these moments are and how much anxiety there is out there regarding what's in the stock market, what's going on. It's just crazy out there. So an article to read and to kind of remind yourself, hey, that there's some crazy shit going out there. Don't be spending your money.
There's a lot. Yeah, there's a lot more than fundamentals that are driving the market. Obviously, we're not all rational as economic theory suggests that we are. That we rationalize and stuff like that. We're not rational at all. There's a lot of feelings, a lot of emotions that drive all these changes. And so, if you can be aware of them, then more power to you.
So as we wrap up today, I appreciate you, sir, Mr.
Yes,
Ayala
thank you for
from
having me. Yeah.
the Coleridge Group. We're here every Friday in the lunch hour. for at least 30 minutes, if not a little bit longer. So if you have any questions or comments, especially with anything you've seen today, please go ahead and put those in the comments section. Give us some heart emojis, give us some likes on YouTube,
Thumbs
Facebook.
up. Yep.
It helps us help you, help us help you. So
Exactly.
with that said, Robert Morales, our CEO network, also of Morales Group of HomeSmart,
Yes.
Francisco Ayala of the Coleridge Group. We will be seeing you next week.
Signing off. Bye-bye.
Adios.